Look, thanks very much for joining after lunch, and I'm sure the food is still in our bellies, and I'll keep it light. And what I'd like to do is people, if you do want to ask questions as we go, let's make it that little bit more interactive. And I'll tell you all about essentially what we do at Energise Africa and how, through the way in which we structure investments, this is a way in which you can invest into Africa in a de-risked manner. So maybe if I just kick off with a bit of an intro and tell you, who I am, talk a bit about why you're here listening to me and how we do what we do. So as a starter for 10, I've spent the last bit over 2 decades investing into clean energy, both in developed markets and emerging markets. And everything from working with large companies, large investment funds, as well as smaller investment funds for private investors. And prior to joining Energise Africa, I was the director in charge of renewable energy for the UK for Ernst & Young. And I decided to join Energise as a desire to do, with my career, that bit more in terms of the impact in terms of clean energy. In terms of who Energise Africa is, so Energise Africa is an investment platform. We have around 5,000 plus investors, and it was set up with the help of UK government about 8 years ago. So UK aid provided about £3 million to establish this vehicle, and that's gone on to do a lot of positive investments in Africa, as I'll explain. Okay, let's get going. So what have we done? We've done around 44 million to date over that 8-year period. And as I said, we've got around 5,000 or so investors who invest through the platform. And essentially what we do is we provide these opportunities to investors to be able to create both a positive financial return and, as importantly, or more importantly for many investors, the impact that their money can put to work. So these are ethical investments. They're not without risk, and clearly there's the disclaimer down the bottom there. As with all private investments, there is the risk that you lose all of the money that you've invested. But clearly what we do is we work to ensure that we've de-risked it to the fullest extent possible. Since we started, we've had around 240 odd campaigns, so investment bonds, essentially impact bonds that we have raised. And all of those have been success in terms of the raise. So we've raised the money that we promised for these investee companies. And to date, that's supported around 1 million people, especially in the area of energy access. And that's an important factor. Clearly with the name Energise Africa, what we're about is supporting Africa address what is quite a remarkable situation, which is there are significantly more than 600 million people in Africa that don't have access to reliable energy, electricity. So the very basics of what we would consider needed for running our lives today. But we do it in a way in which it's with clean energy. Clearly Africa, with its immense solar resources, using that solar resource to provide that energy is a key linchpin of what we are doing. And the Sustainable Development Goals clearly play into a lot of the investments we make. So it's not just about reducing carbon through the alternative, which to many people would be using a diesel generator, which is both creating a lot of carbon dioxide clearly, but also the health impacts are pretty immense in terms of people's lungs and the dirtiness of that source of energy. So we typically touch at least 5 or 6 of those Sustainable Development Goals for each kind of investment that we do. As I said, any questions, happy to just take them as we go. But let's talk a bit about how we do it. So as you can see at the top left there, our retail investor base who are seeking impact investments. So both, the positive financial return, which typically at the moment is in the order of 8%. And we put this within an IFISA. So for many people, that will make that effectively a return that's not subject to tax. Is creating both a positive climate impact and then, as I said before, the social impact, which is incredibly important. So you're creating additional jobs for people. You're helping them lift themselves out of poverty. So we're not aid. We are seeking a financial return, but we're providing a hand up instead of a handout to support people in Africa. We also provide for first investments of around £100 that to be protected by a guarantee fund that we have. That will be changing in the near future with additional funds that we've got to provide an even greater guarantee level of against loss protection. And as I said, in terms of the people that have supported us to get to where we are, it includes UK Aid, there's people like Good Energies, and then there's a group also called CEI Africa, which is our first kind of institutional investor that's investing alongside our retail investors. So what they're doing is they're providing an initial, I think it's 1.5 million euros, which is going to rapidly go up, which provides a degree of matched funding. So as an individual investor, you may invest, let's say, for argument's sake, £1,000 across a number of investments. And with this matched funding, that may then be matched by potentially a further £1,000 to effectively supercharge the impact that you're creating. So you're unlocking additional money that's also going into these companies. And as I said, and I don't think we have a pointer, but in the middle there, you can see what we do is we provide these as individual investment bonds. So you select which investments you wish to support and which countries you may wish to support, which companies you believe are the right ones for you to create your own mini portfolio to invest into Africa. Actually, it's a good point to just pause there for a second. Why should this be part of anybody's portfolio? It's Africa. This is super high risk. Why would you want to be doing that? And there are a number of reasons beyond just the good return that you're getting, both a positive financial return and good in terms of the impact that you're creating. This is private sector investment, so it's clearly uncorrelated to the stock markets. So as a previous investor who managed a lot of high net worth investors' money, you typically want to have a degree of your portfolio, relatively small, probably 5 to 10%, which you're seeking to both generate a positive return, but also the least amount of correlation to the broader stock markets. And that's what I used to do with renewable energy and forestry, actually. So one of the companies that I was an investment director for, we were providing returns of probably around 7-8% as well a few years ago. But it was uncorrelated to the stock market. So it's actually, from a risk management perspective, it's actually and probably a sensible thing for many people to consider. I certainly do it, and a lot of people I've advised in the past have done similar. Back to Energise Africa, so a series of different bonds so people can create their own mini portfolio, their own chosen source of impact investments. And that also clearly reduces provides that diversification risk. And then, as I said, on the right there, you can choose which clean energy companies you can invest into. And the way in which we do this, which is the important bit as well, from a de-risking perspective, is we're not doing this as equity. This is investing in Africa. This is not appropriate, I don't think, for probably retail investors to be investing thousands of miles away in equity. So what we're doing this is, how we provide this is, as I said, as impact bonds. So these are senior secured bonds into these companies, and typically between 1 and 3 years, because we think that is a reasonable length of time for which that money can be put to work in the best way. But also you're then not exposed to, that long tail risk from investing in Africa. Okay, so that's a bit around what we do, how we do it. I think probably good to talk about how do we get comfortable to the point where we can present these to investors. So Energise Africa is an FCA-regulated company, although we're owned half by a not-for-profit called FX, which is another impact investor, but purely for the UK. So we're essentially the emerging markets arm, if you like. And then there's another Dutch impact investor that also owns us. So being FCA regulated, clearly that means the level of diligence that we need to do in every one of these investments is to a high standard. And as you can imagine from someone who's worked from EY, the approach in which I apply diligence is no different than if I was investing into a UK private company. So in terms of clearly the commercial or financial due diligence that we do, the legal due diligence that we undertake as well to ensure that we're investing into companies that we believe in and are secure from a KYC perspective. And then also the technical due diligence as well. And we may, for all three, hire additional external advisors to support us to come with a view that we take to our RIC. One point that I think is important is also how do we fit into the kind of whole ecosystem of investing into Africa? And you've got a bit of that down the bottom right. So clearly there's aid going into Africa, although that's diminishing quickly. You've got other governments that do direct support via something called DFIs, Development Finance Institutions. So that's another way in which companies can access. Typically, those DFIs to consummate a deal can take anywhere between 18 months to 2 years sometimes. We're able to take commercial views and be able to do this in probably half of that time, or in some cases even quicker. So our additionality to those companies in Africa is an ability to source capital in a faster and more predictable way. Always good to kind of use a couple of case studies to really illustrate what we do and what it actually means. So I'll talk about two companies, one being a company which is kind of bottom of the pyramid in terms of people with very little or no energy access and have very low income levels, which is Altec. And then another which is typically slightly more income, which is a company called One Power. And, I didn't notice that down there. That makes my life easier. And what they do in terms of providing like what we call a mini grid. So essentially you're essentially connecting a village up. So we'll go through both of those. So these are both closed deals. So I'm not promoting anything here. Let's be very clear. So Altec is a company that is providing both solar lanterns, and you can see a little one there in the middle portion of the pictures, and then also solar home systems, which is a very rudimentary, what we'd have in our own home, solar panels on top of the roofs with then typically some form of perhaps a mini battery, and then some lights and TV in some cases as well. So quite rudimentary. But this is people that don't have any access to electricity. So when I say that these investments are transformational, I can't really explain that in a way in which I think really captures what it is. I've actually been to places like Benin and other places, and you see how this can transform people's life, not just in terms of lights in your home so that you can, have more of a family life in the evening, or your kids can actually continue with their education. but also it enables like that mini economy within these places to start stimulating, additional income into those communities. And a big thing which I personally hadn't realized until I went to Benin, there's a strong mental well-being element to this too. So if you're living in darkness from when the light or when the sun goes down, that feeling of insecurity, that security element as well, having lights in these places it really does impact people's lives in a very positive way. Okay, back to Altec. So Altec was started probably around, I should know this, maybe around 10 years ago. It was actually started by two gentlemen that met in a refugee camp, amazingly. And they bootstrapped this business up from the very beginning. And the reason behind it is one of the gentlemen, some of his family actually died in a fire because they had like kerosene lamps in their home. And so it's a very personal, mission that's driving this company. These guys, despite the fact that at one point they had revenue touching around $20 million, this is how significant some of these companies can get. The money that's taken out is modest in the extreme. I can't quite understand it in some respects because it's so different to the way in which we look at things. He wants to help transform his country, in which case in here is the DRC, which is around 80 times the size of the UK. And you've got, energy access levels in some of these rural areas of probably like 14, 15%. So you can imagine the millions of people that he's trying to transform lives. And that's what drives him. And this is one of the areas in which, again, is difficult to convey in diligence terms, but the way in which we look at investments as well is to look at the underlying motivations of people and their commitment to these businesses. So that's a big plus point for Altec. They had a tough year last year, actually. I think they had around 14 million revenue. So a bit of a downtick, but still doing incredibly well, still profitable. I think their EBITDA last year was 2 or 3 million. And we previously had lent £2.5 million to them, fully repaid. And that was used to really help them scale towards these, 15, 20 million kind of revenue delivery, because the margins that these guys make is significant too. It needs to be. It's 50% plus in terms of gross margins, because there will always be some people who don't pay or whatever. So you need to have that tolerance within the business to be able to manage that. So I've deployed a further 1.5 million to them this year. We may do a bit more, we'll see. And as I said, this can be as basic as these solar lanterns, which can be sold to people on maybe credit terms of 3 months. So people can have like 3 months to repay it, which I think there may be like $60, $70, through to, more of a solar home system, which is then repaid perhaps over 18 months to maybe 24 months, that kind of time frame. So you're enabling these individuals with limited financial means to get access to energy. And that's now going to expand to, as you can see down the bottom right here, clean cooking stoves. So in the DRC, people are using charcoal, rudimentary, burn it to cook your food. Really bad, clearly, in terms of the effect on people's lungs. And also, it's not cheap for an individual to buy the charcoal to do this. Maybe $200 per year. That's coming out of maybe a $600, $700 per year income. So significant. What these clean cook stoves do is use probably half of that level of charcoal. And in terms of buying one, it might cost you maybe $20. So you can see that for an individual family, that can repay relatively quickly and provide additional income for that family, which then may enable them to maybe then buy a lamp and things like this. So Altec is looking at how do we support, again, people both from a access to energy, from a perspective of can they earn or free up more of their income to do more things, such as the cook stoves, and then the health benefits, of course, as well. They're also going to move into electric vehicles, bikes too. We actually already do an electric vehicle bike business in Kenya, which is going well as well. I mean, we have invested across 17 countries in the last 8 years. We're currently in around 7 or 8. We may do a few more countries, but that's probably the max in terms of our capacity, I think. Important to know with the DRC, it's actually a dollarized economy. So a lot of transactions are just done in dollars. So if we're lending in pounds to these companies, their ability to repay us in hard currency back in pounds is important. So given the DRC, as I say, is a dollarized economy, that's an important factor in terms of not being exposed to wild fluctuations in FX rates. So what does it mean for what is then offered to one of our 5,000 or so investors? So this year, literally in the last couple of months, we did a £500,000 bond. Interest rate, as I mentioned, around 8%. It's within the IFISA wrapper, tax wrapper. And an important point with Energise Africa as well is we want to be inclusive in terms of enabling more people to be able to access these types of investments and make these investments. I worked in a fund where in the past, the minimum investment was, I think, close to £50,000. You couldn't even get access to these kind of investments that I was doing without having that kind of money. That's not what Energise Africa is about. So, as I say, as a minimum of £50, this one was for a 3-year term with repayments every 6 months. The last bond that I did actually got an enhanced level of match funding. I think I mentioned to you before, CEI Africa, which I should have said actually is, where's that money coming from? It's from the German government. It's KfW and it's Swiss Development Corporation. So they've looked at us over a long period of time and what we do and decided, look, that's a great way in which we can use some German money or Swiss money that then unlocks further private sector capital. So for them, it works too. They're unlocking. Vice versa for us as investors, in this case, if I was investing £1,000, then another £2,000 was coming in from CEI Africa. So the actual effect of my investment is £3,000 worth of impact. So because of that bond closed within 8 days. It's pretty remarkable. I don't think we've had one go that quick, but it kind of showed the power of this matched funding. And what it's going to enable them to do is to do 12,500 of those lanterns, around 1,200 solar home systems, and the number of people that then that reaches is close to 70,000. So for an individual, you're saying, okay, this is what I'm helping deliver. That's Altec. And then, didn't manage to change the pictures in time this morning. The next one is in Benin. And this is, so ignore the pictures for a second and in your mind, visualize a village of, let's say, maybe 1,000 homes, 5,000 people, no electricity, apart from a few people who might have some diesel generators. Not very many though. And what One Power does, it's backed, or it's a US company effectively, or US charity that's been doing this for about 10 years. They will come in, they will do almost like a mini solar plant on the edge of the village with batteries and things, which then connects up all of these individual homes. So, and then, they're clearly metered and all the rest of it. So then individuals, without having to pay for a solar home system, as I mentioned before, which might be a few $100s, like you and me, they're just then tapped into a source of electricity, and then they've got access to electricity. And it also is then, enabling electricity into the schools so the kids can be educated, can have access to PCs and the internet, all the stuff that we take for granted. It stimulates the local economy. It could be a cafe, it could be something like someone that has fridges that can then store food so it's not spoiling so quickly. And vaccines, so you could have medical elements to this as well. So I actually went down to Benin to see this, and as I said, they've done this across Lesotho, and I think they've had investors, you may know them, Camco is a very large fund investor backed by UK government, effectively. And then EDFI, which is the European investment fund, or one of them. And they've done this in Lesotho, and they've got a number of these mini grids working well, and I think they raised recently another 3 or 4 million to do even more. So we're helping them with these projects in Benin. The total investment costs around close to £4 million. We'll potentially do about 1.5, I think, in the end, million towards that, to connect up around 9 villages. And each bond is then phased to how this company is then delivering these across these different villages. The important de-risking element to how we're doing green mini grids in particular, which is going to be huge in Nigeria, but also other markets, is that once a company like One Power builds this mini grid, it then gets access to what's called results-based finance, which is effectively a grant. Once you've built it, effectively that money comes back, which covers around 45% of the capital cost. So for us as investors, what we can do is we can say, well, okay, I can invest and I can ensure that my repayments are fully covered by this results-based finance that's coming from someone like the World Bank or German government, whoever. So actually my repayments, the source of the repayments is AAA credit rated. And as an investor, what I have to believe is that company can deliver, can create the result. So this is a big thing that we're now doing, where, as I said, the risk is around their ability to build it, get it connected. If they've done it before, in simple terms, there's a good chance that they'll be able to do it again. And the other really important factor here is that it's typically either in euros or dollars. So the foreign exchange risk is then largely taken off the table, because the pound to US dollar or euro rate, typically, notwithstanding Trump, is relatively stable. So I did an initial 300,000, closed last month. Again, about 8% return for investors, slightly shorter term, 2 years, because that should provide ample time for this to be built. It could actually, the money could come back a bit quicker than that. I think it could be maybe more like 18 months, but we'll see. And in this case, rather than match funding, what CEI Africa is doing is providing a loan alongside us, which is subordinated to our investors' loans. So in this case, if we're providing, let's say 1.4, they might be providing another 1.4, and then the developer has to provide some equity to go along with that to meet the capex. And in this case, for this small bond, it's in the order of 6,000 people. Please pause for a second in case anyone's got any questions. Oh, please go for it.
If I understood you correctly, then Energise Africa itself is a for-profit entity within a non-profit funded group. Is that right?
So it's an interesting question, a good one. So the reason why it's a company is because the Dutch shareholder couldn't be a shareholder in a not-for-profit. What was desired was that Energise Africa would be a not-for-profit, but by virtue of that, we at the moment are a for-profit. We do not, we kind of cover our costs. We don't actually make a return, which is then results in dividends. So, and if it ever was the case, they would simply be reinvested.
So is that a UK limited company? Or?
It is, yeah.
It is, okay.
It is.
And my second question then is, what's your opportunity to scale, to change your £300,000 bonds to £3 million bonds and that sort of thing? So,
sorry, what, us or the individual?
As Energise Africa, to grow your
what we're
scale.
Doing. Yeah, absolutely. So, I mean, last year, and this is going to post a bit of history on Energise. In the early days, this kind of impact investing, crowd-sourced funding was incredibly popular, and I think it was doing around, at one point, close to 10 million a year for a year or two. COVID hit, so it scaled back significantly. I think it did maybe around 3 or 4 million last year. Part of the reason I'm coming in is to scale it back to not just to where it was at maybe 10 million a year, but to get it towards 20 million a year, which is certainly feasible with what was done in the past, which was 10 million or so. But then also what we're bringing in is further institutional capital now to be able to blend with what we're doing. So the overall objective is probably to get towards 15 to 20 million per year in the next 18 months. That's the goal. Certainly the demand's not the right word. The opportunity set that's there is vast. And I'll just give you an example of one country in this respect. So in Nigeria, the World Bank has put in place a program for $750 million of these results-based finance grants to help energize significant numbers in Nigeria. So for us, with our, even if we had 20 million, is a relatively small chunk of the scale of what's going on there. More broadly across Africa, there's a Mission 300 program that's sponsored by the World Bank and IFC to scale what's going on in Nigeria across Africa. And the reason why it's called Mission 300 is the desire is to energize 300 million people by 2030, which I think is incredibly overambitious, but as the adage goes, shoot for the stars, you might hit the moon. So the level of funding that's now going down this route of results-based finance, which we feel is really suitable for retail investors, is growing exponentially. And as I said, what's great about it for individuals is that, I'm investing, I'm not relying on the individual people in the village to repay me. Through this structure, I'm actually just wanting to ensure that I can get access to this hard currency from the World Bank and others, which can repay my loan. So the ability to scale this platform is very significant. We're seeing other platforms in Europe scaling now quite quickly as a result of some of these new initiatives that are working. And it's part of how the world is transforming from a kind of a more aid-based approach, like here's some money, hope you do something well with it, which is truly unsustainable, to a model where you say, well, okay, here is, yes, not all of it, but a proportion that can come in the form of a grant. As long as you build it, you'll need funding to get there first. So you're going to need to convince people like me and others to get you there. And we're only going to invest in those businesses as well if they're sustainable. So I'm not investing into companies that, might do this for a few years and disappear. We're investing into growth stage companies that can then grow much, much faster and go forward. And a great example of that is in South Africa with a company called Candy Solar, who when we first invested, maybe had a few million of revenue. They've now they're well into the 20 million revenue, and most recently secured equity of around 20 or 22 million, and then further 65 million in debt from the IFC. So those are the great examples of where what we've done is not only created an investment opportunity for individuals, they get their return. We've helped a business then step up in terms of its corporate development and then significantly outgrow us, which is what we want. We've then done our job. We've created a return and we've helped scale a business to these hopefully metaphoric scale. But that's not to say this isn't without risk. Of course, that's a key thing. This is Africa. So, you need to be cognizant that it doesn't always go right. And that's why you want to have a diversified portfolio. And, I would probably think that most people, if you had, let's say, £10,000, you might put one into a series of 10 bonds. Because if let's say one goes bad, then you've still got a strong degree of capital preservation plus the returns on all the other 9. So I've suddenly got a large number of latecomers, which is an interesting predicament. Oh, is it? That's what it's for. Okay, good. I was thinking, gosh, I have to recap everything. All right. So maybe then just to finish off. So I think I've described it before, but the diligence and the process that we go through is no different than if you're investing into a developed country business. I've done investments in projects worth well over £1 billion, but I also do these now, which are like 2 million or so. The same level of rigor largely goes into it. And that's the platform. So have a look at the website, the platform. As I said, there's a £100 guarantee in there that will grow very soon. And yeah, I hope that was interesting for a few of you. Okay. All right.